I'm Dave Keller with Julius de Kempenaer. Today, Julius and I we've known each other for actually quite a while. I wanted to share that story in a moment. And when we were talking about what to do today, one of the things I've loved about working with Julius for a while now is being able to look at markets, look at the RRGs, look at sector rotation, and then think about what that means for investing, what that means for group themes and individual names and all of that. And Julius, when we were talking earlier, I was sharing the story about how we first sort of connected and how we started working together. This was years ago when you were on the sell side as a research analyst.
That's right.
Selling your research, and RRG was really a key component to your process, right?
Yeah. At that time, it was building up. I mean, RRG was not built overnight. It was not like Sunday afternoon at the drawing table say, "Hey, this is it." So it pretty much grew over time. And
right.
I was producing sector-based research for my institutional clients, and you were at Fidelity at the time, so you are like prime target for everybody on the sell side. That's true. I believe it was through one of your counterparts in London that we connected, probably at some conference, and we started talking, and I was allowed to start sending you research and try to give you a call every now and then. Usually got the voicemail, which is the problem with everybody on the sell side trying to call the buy side. They always talk to voicemail. But sometimes we actually got to talk to Mr. Keller himself, and I was trying to explain what I was doing. And at the time, I actually... you moved houses and I just moved to a new house. And the good thing about moving to new houses is that you find stuff, but also that you lose stuff. And what I tried to do this afternoon, and I didn't succeed, was trying to find if I could find one of these old reports that I was sending out when you were at Fidelity and bring that up. Because whether you know it or not, you were actually pretty instrumental in further development of RRG, or in a piece of RRG, I have to say, because people need to know that we had email, but it was not like, internet sites for distributing research wasn't like so common ground.
Right.
We're talking 15 years ago, I think, 10 years, at least 10 years ago, at least, maybe 15. So it was all PDFs. It was PDF reports. So I was producing my my monthly and weekly reports on sector rotation and sectors. And one of the very, very early predecessors of RRG was the last page of my report, and it held what's now in RRG with the sectors, with the last observation and the previous observation. So it was only the tail length was pretty much one. So if on my screen, it would look something like this.
That's right.
That would be the picture on the chart, and it didn't have the scrub chart of the SPY. It didn't have any of that. It had a table below it with the values, and that's it. And I printed that in every report. And one day, you and I were talking on the phone, and we're talking about this, and then you said, "You know what I do? I always print off the last page of your report." I was like, "Why would you do that?" And do you remember why you said that? Do you remember what you did with that?
Well, absolutely. And it brings to mind how, for years we've talked about technical analysis and just looking at charts, right? So much of it is so simplistically two-dimensional. And there's a lot of value in looking at bar charts and candle charts. We both do that very regularly. But what I loved about your work is that it was a different dimension. It was a different way of visualizing it. But when we printed out that last page, we would basically put it in a stack, and then we would flip through the stack of the last pages, and we would magically put your RRG in motion and actually watch the rotation happening. And that, I think, is that next dimension. That's the third dimension of a lot of charting is being able to, move it over time and actually see how relationships evolve, how they come together and come apart. And all of a sudden you could visualize risk and return in a portfolio in a much more meaningful way than tabular data, which is what most of us were living in at the time. So it was a fantastic improvement. We loved that. And now what's cool is that, anyone listening here, you actually, right on StockCharts, you can actually do what we had been doing.
Yeah, exactly. Yeah, I was just going to say, that remark of you, that sparked a new development. And we actually started programming, the possibility to actually make that happen, because we can actually look at the screen. This is what Dave means. This is what he was doing with a stack of papers. Oh, hang on. Let me max that out, because then we'll see. So this is this is what happened with that stack of
Yep.
papers, and look what technology can do for us now. We can actually, make that happen in front of our eyes at the push of a button. So
That's exactly
it's super
right.
exciting.
Well, for what it's worth, I'm glad we made that initial connection and have stayed, become pretty good friends over time, which is pretty cool about it too. Tell you what, let's put the RRG to work. One of the things we actually look at the consumer sector and consumer staples, consumer discretionary are so interesting with the RRG. I mean, they all are, but what I find is so interesting is because it's such a diverse group of industries, right? So you've got a lot of different types of companies. So the RRG and actually seeing how they rotate against one another can be really, really meaningful. So let's start with that. You want to take a shot at some of the consumers?
Let's we're going to do a deep dive. So I'm gonna work my way down from the RRG that you see here, which got all 11 sectors versus SPY in the table below. You can actually on the site change the appearance in a couple of ways. You could, if you want to keep the whole universe there, you can actually tick off the boxes in the table to toggle them on and off. But because what we want to do today is just look at those two sectors, what I then usually do is I just go into the box and select them all and say, okay, I want to look at XLP versus XLY, and just hit enter. And then we have both sectors. Because it's only two, we can actually have a little bit longer tail. We can max that out, so we can actually play around with that rotation and how it goes. Let's lengthen this a little bit to 3 years, a little bit more history, max it out, and then we can actually talk what we're talking about. Because what this is actually showing is that relationship that you had up on your chart list, that XLY XLP ratio.
Yeah.
That's this ratio visualized in a different way. So you had XLP, so that ratio is going down, which means that XLP is doing better than XLY. And that's exactly what this is showing you, because XLP is further to the right. To the right is good, to the left is bad. XLY is also above 100. And that's one of the other beautiful things about RRG. Everything is comparable. If you put those two as a ratio on a plain vanilla chart, you would have to look at all these individual charts. You would have to look at XLY versus XLK and XLY versus XLE, et cetera, et cetera. But here, we can look at all those relationships together in one chart, because all these numbers are comparable. And what we'll see here is that XLP is ahead of XLY, which confirms what you see on your ratio chart, that XLP is moving, that ratio is moving lower, which means that XLP is outperforming XLY. Institutions are getting more defensive. Defensive is still the game.
Now, what's interesting about this rotation between just the two of them, you've had this unusual movement in the last 2 or 3 weeks, right? So it almost felt, as the market was, going to new highs, you had staples kind of coming off. You had discretionary rotating higher, but now all of a sudden in the last couple of weeks, it seems to be spreading back out. Staples recovering a little bit, for moving further to the right, discretionary moving further to the left. How much weight do you put on that sort of short-term move in the last couple of weeks?
Well, this is what I call these hooks. You would expect a clockwise rotation. That's the general rotational pattern. If we scrub through and we do it really quickly, everybody will see that this is a clockwise rotation. But sometimes you'll see these very sharp hooks that appear to be counterclockwise.
Right.
What you need to do then this is a weekly chart, you need to dive down into the daily, and you see it beautifully here. This is the rotation over the last 23 trading days, so it's like three weeks, a little bit 4 weeks trading weeks, so 4 weeks, so 1, 2, 3, 4. So this hook here on a daily chart actually looks like this, which is a perfect clockwise rotation. It's just, it went too fast for that weekly to be picked up as a trend. So that's why you see those hooks. Where do I put more emphasis? I like to work top down. So the weekly is my guidance, is my my primary trend.
Sure.
When I see stuff like this, I'd like to either get it confirmed or denied on the daily. And what I see here is that XLP is still on the right-hand side. and XLY is still on the left-hand side. And it's sort of turning around right now on the daily. But the question is, will this be strong enough to turn that weekly around? And I have my doubts. I mean, because this is a strong move that's going in the upper right-hand direction, like northeastern direction.
Right.
So for the time being, I'm sticking with a cautious approach based on this rotation between these two sectors.
Sure. And you hit on, I think, one of the discoveries we made when we first started putting the RRG charts in motion, actually looking at how they evolved. I think you noticed you had this simplistic idea, or at least we did in our head, that things would just rotate clockwise. And how easy is this, right? You just watch it happen. But in reality, a lot of other things can happen. And looking at the direction, the angle that things are moving and how they reverse. And when they, what you're calling hooks, where, it actually changes direction. A lot of times, some of the more meaningful signals or indications that things were evolving would be from some of those shorter term moves. It wasn't just the rotation around the benchmark. It was actually how some of them individually were moving. But I like here how you're combining the weekly and the daily. There's a great lesson there, I think, for all charting, right? Even just looking at bar charts, right? A lot of times we get really stuck on the time frame we're operating on. We're looking at a 6-month daily chart and that's it. And here you're actually showing how combining some of the long-term and short-term actually gives you a sense of how the short-term movements fit into the long-term trend. And don't lose sight of that, right? That's great.
Yeah, absolutely. And the good news is they continue to rotate clockwise, because if we have a hook on the weekly and we can see it rotate on the daily, if you have some sort of a hook on the daily, then you can see that clockwise rotation on the hourly or the 30-minute chart, etc. By the way, we don't have that available yet, but the good news is that we're probably going to get that fixed at some stage, because everything is now in the cloud, and I hope that Chip will make available some programming capability, because it's on the list for a long time already, to enable to have RRGs running on like hourly, 30-minute, 10-minute, whatever terms data, so we can cater for the shorter term traders, but also the monthly, so we got some of the really long-term trends, because I've got a lot of questions on how to do it for really long-term trends as well. So yeah, I'm pretty excited going forward with the stuff that we got in store.
Absolutely. So this makes sense from looking at staples, looking at discretionary, as you sort of mentioned, on the long term still feels a little more defensive, right? A little more cautious, more skeptical. Do we want to take a dive into one of those, and let's look at some of the group and stock themes within there?
Yeah. One of the things, and I think that maybe a lot of people, well, I'm pretty sure that a lot of people don't know it, because we got a lot of data on StockCharts, and here we look at sectors, but these sectors are subdivided in groups, and then come the individual stocks. Now, if you go to the sector summary page for the S&P sectors, you'll see all these lines that give you these 11 sectors. We all know that. But if you look closely, and we're going to, which one do you want to start with, staples or discretionary?
Let's go with discretionary.
Let's go with discretionary. Okay, so if we look on this line, all the way on the back here, you see 3 icons. The first one, clicking here, gives you a market carpet. The second one gives you a perf chart. And these 4 squares replicate an RRG. So if I click on that RRG, I get an RRG that's filled with groups that make up that sector. Now, one word of caution here. There's a lot of legacy in these groups in terms of data on StockCharts, and I've been working hard with the data team to get those aligned. We're not 100% there, but very rapidly we will have the ability to have all these groups seamlessly tie in with the sectors, so you won't have any discrepancies anymore between classification, because there are multiple systems in play, and we needed to align all of that, and a lot of that work has been done right now. So if you're listening and you've been one of the people who've been alerting us to discrepancies either in sector classification or group classification, we've been working on that, and we're pretty close to releasing that all-aligned setup that gives you groups versus sectors. And this is the RRG for the groups. The only thing I'm going to do here is change the benchmark to XLY, so we have apples and apples and oranges and oranges.
Right, so now we're looking at all the industries and then how they're rotating around discretionary as a sector, right?
Exactly. Yeah. So, and then the cool thing that we can do is we can actually we've seen this. We've got the groups here. And in the predefined groups, if we go to XLY, we can load up all individual stocks inside the discretionary sector. And now we have two things that are pretty cool. So the individual stocks, we got the groups, and the table below, we can actually rank or sort by industry. And then, ta-da, we can actually see that, look, which one is this here?
It's the home improvement.
The home improvement. Now look at, so here are home improvement retailers. So that's Home Depot and Lowe's are actually pretty good. This sector index probably holds more stocks than just the two here, because these two are the ones in the S&P 500, right. And this one may also have mid and small cap items in there.
Interesting. So what's cool about it, and you're right, this is going to capture sort of the S&P members. And again, if you know about how these indexes are constructed, those big names like Home Depot and Lowe's are going to drive a lot of that index because they're the biggest names, right? But it's worth noting, and I'll just, as a teaser, the industry summary page, that's where I spend some time, because that allows you to actually go even deeper and then see not just Home Depot, Lowe's, what are the other names underneath there, and actually see what, maybe mid cap, small cap stocks are of interest. So a lot of times the process that can be of interest is you look at what makes sense on the RRG, what's rotating well, what you think is of interest. Go to the industry summary page. You can actually drill in and see what makes up that index, and then also what stocks underneath there that might be of interest to you, right?
This page, you mean, right? What you're looking at right now? Yeah.
Home improvement retailers, then you can go through there and you can actually see what stocks are going to.
Home improvement retailers. Here you go.
Right. So now this is that group in particular separately.
Yeah. And then the members, boom, here you are. You see, so actually, and if we, here you can sort it. So here's the two in large caps. That's the two that you saw on my list here on the pre-prepped. And here you see that the other ones are all mid and small caps.
There you go. And then pro tip, if you actually sort that by the scooter rankings, so this is bringing in another StockCharts component, right? This is the proprietary blend of a number of different indicators showing you, just a quick ranking of where they're at. That'll show you more longer term what's been working and what isn't. Now you start to see some small and mid cap names that are bubbling a little higher than Home Depot and Lowe's. And again, not saying that you absolutely need to grab one of these, but maybe worth digging a little lower, because a lot of times the bigger names are not at the top or bottom of the list. There are other opportunities that might be out there.
Yeah, let's see. I'm not sure, but I'm going to try something. What would happen if I do sector RRG? Will it? I wonder if it brings me the sectors. Got to talk to the guys. It would be cool if we could throw all these on an RRG now.
All right, jump right from there.
Jump right there. So I have this list there. So this is, if you want to do a deep dive, because that's where we started out. We started at the sector level. We looked at those S&P sectors. We singled out XLY and XLP, and now we've been looking at individual or the groups that make up the discretionary sector. That's all these groups that you see in that table, and then we can actually work our way down to the individual stocks and make up our mind about what we think about some stocks. So, Dave, which stock would you like to let's go for one very good group and one very bad group in this discretionary thing. So
we started looking at home improvement retail, right, which is Home Depot and Lowe's. You can see that on the RRG rotating into the leading quadrant. Let's take a look at some of those larger names, and let's grab a couple of them. Do you want me to grab the screen and look at some charts? Or do you want to go ahead?
No, why not? Go ahead.
All right. So here's what we'll do. Let me grab the screen real quick here, folks. Dun, dun. And I'm, here I'm looking at sort of my own screen now. I'm looking at the tabular form of it, but I'm grabbing some of these lists. So here I'm looking at home improvement retailers, sorting by scooter rankings, and now I can see, a small cap name, BMCH is at the top, Floor and Decor Holdings, FND is next. Then I get to Home Depot. That's maybe where I want to start. And again, not that, all of these names are obviously very different. There's a lot of different movements you can see here, but the largest names are what are going to drive a lot of the returns within that industry index, because they're the biggest cap weight. So in general, that's when people are looking at home improvement retail, they're thinking of the two big ones, Home Depot and Lowe's. So let's, think of this in a vacuum. There's a reason, or it probably makes sense as to why that has rotated into the leading quadrant, why it looks so good. And again, I always go back to technical analysis 101. we have a consistent pattern of higher highs, higher lows. When Home Depot's pulled back to a significant moving average, when it's pulled back, it's not broken often below its most recent swing low. It stayed with the stepwise motion, higher. And then just in the last 2 weeks, we've seen it hit the resistance from July, faltered a little bit, and then gapped up and now has remained higher. Now, in the last couple of days, we're seeing a little bit of a distributive pattern. If you're a candle chart follower, you probably recognize that's a little bit of a worry, sort of this short-term reversal pattern. But overall, the long-term trend remains pretty strong. And this is the relative strength, which again is not a direct component of the RRG, but really drives the RRG, right? Looking at the relative strength. And the fact that this has been a consistent outperformer is why that group, I think, has looked so strong. And so, in my opinion, this remains in a pretty positive configuration. If we do pull back, you have, some good short-term support to pay attention to around 216 or so. That would be the low from the beginning of last week, the week before that. And as long as we remain above there, then this upside trend remains in place. And as long as the relative strength remains constructive, I think that's a pretty interesting chart to pay attention to.
Yeah, I've just isolated Home Depot and Lowe's on my RRG, and what you can see there is that Home Depot is inside the leading quadrant, but it's got a very short tail. All these week-to-week observations are very close together, and that tells you that it is a very solid, gradually growing trend. Right. It's not a race car. It's just a solid marathon, just going higher and higher and higher. Whereas Lowe's is inside improving, but it's got a much longer tail, which tells you that it's catching up with Home Depot. It's making large gains from week to week, and it's rapidly improving to catch up with Home Depot. So, if you want some actionable views and ideas, Home Depot is your core, your holding, that's steady stuff. And Lowe's is where the opportunities are. That's probably what you want to pick up, on any dips, or just buy it outright because you like that group. Because it seems to have the potential to move faster than Home Depot in the next few weeks.
It's a great point. And, looking at the chart of Lowe's now on the screen, it's recently overbought after this big move up here. So it was a little more extended maybe than Home Depot was. But, so with both of those short-term distributive patterns, you might expect a little bit of a pullback. But overall, I mean, long-term constructive could be an interesting time to buy on the dips if you buy into the long-term uptrend. But you made a really good point, and I think that's where I've always found the RG can be helpful. Is right now I can go back and forth between the chart of Home Depot, the chart of Lowe's, and do my analysis between the two, and then start to think of how they relate. But on the one RG graph, I can actually see the two of them together and actually how they're moving relative to one another. There's a lot of value in that, especially, I mean, again, your world is not made up of two stocks. It's 2,000 plus, right? So
exactly,
the ability to sort of sort through it, I think, can be pretty helpful. I'll tell you what, why don't do you want to take the screen back and let's look at maybe a group that has been less constructive, maybe on the something that looks less attractive based on the rotations, and let's dig into that.
Yeah. Look, here's the tail on Lowe's. Right. And here's the tail on Home Depot. You see what I mean? So the Home Depot is really short. It's like boom, 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 just steady going. And then you got Lowe's is like bam, 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 and it's increasing every time. So that's where the power is, and that's where the Home Depot is where stability is. Yeah, I was looking at if we stick with consumer discretionary, USFH, help me out there, furnishing index. Furnishing. Let's see what that is. And I then have to go to that sector summary page again. No, industry. I need to go to industry.
Yep, that's right.
Yeah, so here you go. We are amateurs. We're not. We're just winging it. Industry summary. There you go. There you go. And then it's discretionary. And I need to go to
furnishings there at the top.
Here, furnishings, there you go. And then the list. There it is.
So these are some interesting.
Which stocks are we going to look at?
Yeah, so like Mohawk jumps out at me, right, on MHK.
Yeah, let me see, because what I needed to do is give you that discretionary thing. If I was looking at furnishings here, this is what I wanted to do. Oh, there's only one here. Oh, Mohawk. That's the one you were talking about. There you go. That's the only one in the S&P 500 of all those stocks.
Yeah.
Oh, there you go. Yeah, and that, yeah, well, they look alike, and there is probably a reason for that.
And so this is a good lesson in how you drill down in these things, and you're absolutely right. So what's happening is basically that one stock Mohawk is what's driving that industry level RRG, because it's the one big stock within that group. But if you look at the industry summary, you can see there are a lot of other names.
Yeah, there's a lot of them. Yeah, exactly.
That you're probably even familiar with some of those companies. You've bought their furniture, but seeing where they're at and how they relate to the big cap names. And so it's MHK and LEG are the two large cap.
LEG, yeah, exactly.
So those two, if you wouldn't mind just bringing up a chart of Mohawk from there, or looking,
no problem at all.
It's in the lagging quadrant. If we look at a chart of Mohawk, you'll see why this is a less attractive name, relatively speaking. And I use relative, pun intended there.
Yeah.
Look at the relative strength and how it's just been essentially deteriorating over the last.
Here's your relative in the middle.
Yeah. And then at the bottom, those are the two lines that make up the scatter plot, the RRG that we're familiar with. You see how those have rotated downwards as it's rotated into the lagging quadrant. So this is a stock. If you look at the daily chart, you'll see a similar thing. It's almost a bear flag pattern that we're seeing right now, where it's at a big sell-off and then just a little bit of an upswing. But overall, there's not a lot to be excited about. And again, in general, I've always told people, don't confuse the bottom of the page with support. If a stock keeps going up, just because it hit them, and it's funny, in my previous role at Fidelity, we had this huge monitor, and we'd always joke when the price would hit the bottom of the TV screen, that was not a reason to be buying the name, right? Because
remember when we had RRG up on that screen? That was awesome. I have pictures of that.
So again, it's a good reminder that usually when prices go down, it's gone down for a reason. It's not to say that there aren't bargains out there, and I've known plenty of deep value investors that do just fine as with performance. So it's not to say that it doesn't work, but I would not use it being very low as being the sole reason to pay attention to something. And if you look at just the far right side of that chart of Mohawk, you can see it's had a steep sell-off down at long-term support. A little bit of that flag as it's come back up a little bit. But overall, it's pretty close to where you would potentially break to a new low. You violate the downside of that pattern, and boy, that would be sort of a warning signal for.
Here's your daily.
Not my favorite, right? Not my favorite.
No.
Friend follower, it's hard to get excited about.
But you know what? I mean, if we bring it back to some actionable ideas, and we stick with discretionary, we've seen Home Depot and Lowe's in a group that's doing very good, and now we see Mohawk in a group that's doing not so well.
Right.
If you can trade long, short, or you trade options, or I don't know how you run your portfolio, but if you're able to initiate and manage pair trades, then I think either buying Lowe's and selling Mohawk or buying Home Depot and selling Mohawk would be a great trade. And you mitigate the general market risk, and the odds for Mohawk going up or Home Depot going down are a lot less than Mohawk going down and Home Depot going up. So, for me, if you look for pair trades, this is the type of trade that I'm looking for to put on.
Well, Julius, when you and I spoke earlier this morning over coffee, we agreed that 30 minutes would probably go by very quickly, and sadly, it's done. It's done.
Yeah, I know.
But we know it. And again, what I hope we've illustrated here with this deep dive is the depth to the platform of what we're able to do, starting with the big picture, looking at sector rotation, drilling into some of the stories, some of the movements, and identifying some names that might be at actionable points. And we've highlighted, a pretty solid group and a pretty weak group, but there's another level of looking at all the different groups and how they're rotating around one another. So, listen, maybe if the people get what they want in your blog, you could share a deep dive in Staples at some point and fulfill the other side to what we.
Yeah, that's a good idea.
To see. And